Hey, good evening, everyone. Welcome back to the channel. So in this video, we're going to do another portfolio review of the 60,000 per year dividend portfolio, go over some recent buys, some recent changes, and we'll take it from there. I'll also take any comments. So let's go look at here. So last Friday, I actually bought into some MSTR, which is doing phenomenally. I'm very happy with it. So I have both MSTY and MSTR, the underlying. So let me share the screen over here. Oh, welcome. Welcome. Okay, so let's share the screen over here. Um, Keep in mind this account is a piece of the overall. So we are up to 58,000 estimated. Monthly average is about 5,000. For July, we still have a few more to come in. We've received the most of the dividends already within the first couple weeks of the year. It gets some interest. Total for the year, we're at 30,000 for the year already. Remaining 27,757. So we've received more than half for the year. Um, and then the bulk of these are coming in the individual account. And then the rest are in the Roth IRA, which of course I can't touch. I can only touch the ones in the individual account. As far as equity portion of the portfolio, we have several of them that actually don't pay dividends now. We've got Chipotle, which I've been dollar cost averaging into. Nvidia, still holding AT&T, still holding the bag on that one. Have more high tie. Still have some JP Morgan stock, which is at an all-time high. Have some Sprouts stock. Tesla, Starbucks pays $114. Bought some more Starbucks. Officially in the black on that one. Here's my MSTR, which is the most recent addition to the portfolio. Doing quite well, up over 10% already. Palantir, Manulife Financial, Square, also known as Block, Dollar General, and then Warner Brothers still holding the bag there. Car Gurus, Intel, one share of SMCI. I still have IQIYI, ticker symbol IQ. Been in this one for years, actually, kind of holding the bag on it. And then a few others. And then so that part of the portfolio doesn't pay a whole lot of dividends, but it's obviously the ETF portion that pays the bulk of the dividends because these are basically 822 for the year, and then you see the remaining. And then of course Tesla is paying the bulk of the dividends of the portfolio. Total estimated is here, and then Coney pays this, SQY, Clip, and then look at this, MSTY, one of the newest additions to the portfolio, is another 200 a month, adding to dividends. So those of you all that know, like I am not like a solely dividend investor. Like I could, if I wanted to absolutely max these out and dump everything into these, I could be like some of these other channels. I could have, 100,000, 200,000 in dividend income, but that's not my core philosophy as an investor. As you all know, I'm a growth investor that does some dividend investing. So, like I say, I do put my money where my mouth is, and I do invest in these funds, and I show that on this channel now. And so this is generating like a $60,000 annual income, but this isn't the 401ks, this isn't any index funds or anything like that, um, or real estate. So this is nice. This is attractive, but you're not going to see me like trying to max out or go all in on margin to double this. I mean, I could easily double this on margin if I wanted to do that, but me personally, I choose not to do that at this point. Anyway, so MSTY. Now TNA, this is interesting. So small caps are starting to make a comeback. So TNA is starting to surge, which is funny because actually in the 401k, which I'm due for a review on, I just got out of small caps, and oddly enough, timing couldn't be more perfect. Small caps are starting to go up. But the tech portion of the 401k was doing so well that I determined had I been allocated to where I am now, it would have been like another 18,000 for the year on top of what I've already made. So that's where little allocation movements can come into play in terms of, maximizing your overall rate of return. So TNA pays a slight dividend, but it's doing well overall. QYLD pays this. JEPI, and then the split or the reverse split is coming. FEPI, QQQY. and QQQX, some YMAG, some Alti, and some BETO. So this portion, this is received year to date, and then remaining. So that's what we're looking at for the year. So that's the bulk of the dividends here. Here are my Apple call options, which I probably should have sold last week. They've dropped. They were up to 8,000. They're down to 5,700 now. Still a solid gain, but I'm actually waiting for earnings to come. And what I find a little strange today is that I was trying to follow the market. It's obviously been a crazy uh, weekend with all the news and stuff. And I also feel like this is like the craziest month in American political history, which says a lot. But the market, I was trying to follow it as close as I could today. Oh, Apple did end up dropping today. That's why I was down. Um, I'm going to stay in at least until earnings and see what it does. But I was sitting on a nice juicy gain. I mean, I still have a nice gain. I think I've still 10x'd on this, but it was up to 8,000 here. So it's dropped quite a bit because of volatility. And then these others I'm not too worried about. And then I'm actually sitting in some cash here. So there is that. So that is pretty much the update on the dividend portfolio. There's been a couple of new additions, MSTR and MSTY. So we don't have too many comments here. Market as a whole, the market did really well today. We had well, let me adjust the camera. You all can't see too much here. Hold on. Oh, yeah, what a crazy last few days. Uh, okay. So, yeah, the Dow's over 40,000. The Nasdaq went up 280. Phenomenal day. S&P 500 was up 60 points. The Russell, so get this one, since what they talked about, sector rotation, July 11th, the Russell is up. At one point, we were up 11%. So the Russell 2000 is at almost 2,222. It's only like 1 point away. 2,220, 65. So it's like a point and 35 cents away. Anyway, so that's the portfolio review today. Thank you all for tuning in. Like, comment, and subscribe. Let me know what you think. Let me know if you think if you think it's better to do margin, if you think it's better to just go all in and maximize this out. Like I say, most of these underlyings do better. But dividend income is certainly nice. So thank you all for tuning in again. Like, comment, and subscribe, and join Discord. And we will see you all very soon. Take care. Have a good one. Bye.